Hello and welcome to Mr. Curran's Ledger-ary accounting tutorials. This one will be concentrating on the debits and credits of accounting. So in this podcast we'll be looking at what accounts actually have a debit nature and what accounts actually have a credit nature. From the previous vodcast, we actually looked at what are revenues, what were expenses, what were assets, what were liabilities, and what was owner's equity. So in this vodcast, we are looking at whether revenues have a debit or a credit nature, whether expenses have a debit or a credit nature, and whether assets, liabilities, and owner's equity have a debit or a credit nature. In accounting, there are two types of natures of accounts, either a debit or a credit. So when an account actually presents itself through a transaction, you need to determine what is its nature. And in that case, it can only be a debit or a credit. In any transaction, there is going to be at least two accounts affected in a transaction, and both the debit side of the journal and also the credit side of the journal must equal in order for the accounting process to be complete. So when you're actually completing a transaction journal into a general journal, you need to make sure that the accounting equation actually equals itself. So as we know, the accounting equation can be represented in three forms. Assets equals liabilities plus owner's equity equals assets minus liabilities, or owner's equity plus liabilities equals assets. So in essence, you need to look at, in any transaction, what are the accounts that are affected and what are their initial nature. So in accounting, this creates the greatest of confusion. What are the debits and what are the credits? And that is what we're going to be exploring now. What has a debit nature and what has a credit nature? Now, a definition of a debit is a payment made or a payment owed to the organization. And when I was actually learning accounting, I used this acronym here, DEAD. Dead, hence the representation of the bird actually dying there. So D equals debit, and the following accounts have a debit nature: E for expenses, A for assets, and D for drawings. So in any transaction, whether an expense is being paid or an asset is being bought or the owner is drawing money out of the business, those types of accounts will have a debit nature. So when you're looking at a transaction, the tips to ask yourself as to whether an expense or an asset is relevant in that transaction, you have to ask yourself, is the organization having to pay for something for that account, or is money actually owed to us? So for example, when you buy a motor vehicle, one of those accounts will be a motor vehicle, and a motor vehicle is an asset, and an asset has a debit nature. Or if we are actually paying for wages and salaries, wages is an actual expense, and therefore expenses have a debit nature as well. Now, determine the nature of these accounts. Accounts receivable, a building, drawings, a bill that you have to pay, cash at bank, a motor vehicle, expenses in general, for example, repairs and maintenance, superannuation expenses, advertising expense, a computer. So let's look at the first one. What type of account is accounts receivable? Firstly, you need to look at, is it an asset, liability, owner's equity, revenue, or an expense? Since accounts receivable are people who owe the business money, that is classed as an asset, and an asset has a debit nature. Looking at a building, is a building a revenue, an expense, owner's equity, liability, or asset? Now, as a building is something that is of tremendous value to the organization and can be used to generate revenue in the form of rent, it will be classed as an asset and therefore will have a debit nature. Drawings. Drawings is a type of negative owner's equity, and in this case has a debit nature. And drawings only has a debit nature. It can never be a credit. Now, an accounts payable or a bill owing is a liability, and a liability has a credit nature. So therefore, it is does not have a debit nature. Cash at bank. Cash at bank has tremendous value to the organisation and therefore is classed as an asset. And an asset has a debit nature. A motor vehicle is something of value to the business and can be used to generate revenue if you're using it to pick up goods and services or to be used as a salesman's vehicle. And as such, it is an asset which has a debit nature. Expenses in general, so that could be advertising expense, that could be salaries expense, that could be superannuation expense, repairs and maintenance, and as such are outflows of money. And outflows of money has a debit nature. For example, paying of a motor vehicle, outflow of money to purchase the motor vehicle or to pay for the wages, which is an expense. A computer is an item of value and is therefore an asset, and that asset has a debit nature. So what is a credit? The definition of a credit is the inflow of money into the business through revenues, debts being owed, or an owner's contribution. Now, when we look at debts being owed, that is debts being owed by the business. So in other words, we may owe the bank money from a loan, or we might actually owe an organisation money for the purchase of inventories. Now, as previous, here is your acronym that you will actually learn in order to determine what has a credit nature. So CLCR, and I called that clicker. So what has a credit nature are liabilities, for example, mortgages, loans, accounts payable, capital contributions, when the owner puts money into the business or introduces assets into the business, and revenues. And for this unit, the only type of revenue that you will actually use is services revenue. For example, income generated by a doctor seeing patients, or accountants doing income tax returns for clients, or plumbers fixing drains for organisations or clients. They are classed as services revenue. Now, the tip to ask yourself when determining what has a credit nature or what accounts have a credit nature is an inflow of money somewhere in the transaction. So what I mean for the inflow of money is, for example, an organisation may have made a sale, or the plumber may have done a service revenue for a client, or the accountant may have completed an income tax return for the client and charged them $200 for completing the return. In other words, when they receive that money, there is some form of inflow of money into the business, and that is usually into their cash at bank account. So determine whether the following accounts have a credit nature. An accounts payable, when you actually owe someone some money, whether you are performing services in the form of repairs and maintenance, computers bought, dividend revenue that you actually received from your investment in a public company, repairs and maintenance, or services performed in actually fixing of houses and doing plumbing and building services itself. So we are going to go to the first one. Now, accounts payable is a liability, and a liability is an outflow of money that you actually incur when you pay a bill. So therefore, it has a credit nature. Accounts payable, being a liability, has a credit nature. Services being performed by you in the form of building repairs is a revenue, because it is an inflow of money and you're actually performing a service. Now, revenues have a credit nature. Computers. Computers are items of value and are therefore classed as assets. And as we know from the previous slides, assets have a debit nature. Dividend revenue. Now, dividend revenue is income being flowed into the business when you actually have an investment in another public company. So it is actually income generated by you, and as such is a revenue, and a revenue has a credit nature. Repairs and maintenance is an outflow of money from the business, and as we know, outflows of money of the business have a debit nature, and in this case it is an expense. An expense has a debit nature. Services being performed by yourself to either repair buildings or to do plumbing or any type of work for a client is an inflow of money and therefore classed as revenue, and revenues have a credit nature. Okay, now I'm going to give you an overall test, and you need to determine whether these accounts that pop up have a debit or a credit nature. Services revenue, repairs and maintenance, capital contributions, accounts payable, wages and salaries, a loan, or a mortgage. Let's start with services revenue. Now, when you look at this transaction or this account, the first thing that pops up is the word revenue. And in this case, any form of revenue is income or inflows into the business, and revenues have a credit nature. Repairs and maintenance is an outflow of expenses out of the cash at bank account, and therefore classed as expenses, and expenses have a debit nature. Accounts payable are bills or organisations that we owe money to, and therefore are classed as liabilities, and liabilities have a credit nature. Wages and salaries is an outflow of money, and an outflow of money are called expenses, and expenses have a debit nature. Capital contributions. Capital contributions is an injection of assets or cash into the business by the owner, and therefore is a positive owner's equity. And in this case, capital contributions have a credit nature. If the owner was withdrawing money or assets, therefore that would be classed as drawings, and drawings has a debit nature. So either you can only have one type of nature for those two accounts. Capital contributions will always have a credit nature, and drawings will always have a debit nature. Mortgage and loans, they are people that we owe money to, and in this case, usually large sums of money. And people or organisations that we owe money to are classed as liabilities, and liabilities have a credit nature. So our next Vodcast that we are going to be looking at is doing some transactions analysis and completing general journals.